short briefing session so that we can give you a sense of what the numbers are and how to make sense of it. Just let me first start with the market conditions. I think for us, I think India continues to shine, and there is temporary headwind that we see in China because of the duties that happen there. And otherwise, the rest of the market, be it UK or Europe or US, continues to face the challenges that were there last time as well. In this situation, I think we've turned in a pretty strong set of results for the domestic business with turnaround 2.0 firing all cylinders, and the JLR impacted by the market conditions. In the case of JLR, so let me start with the revenue growth. We did a 24% growth in volumes, that is wholesales that I'm talking about, and revenues were up 14-odd%. EBIT was down 130 bips, fundamentally because of JLR numbers coming down because of the wholesale lower number. And overall PAT at negative 1,863 crores is what we delivered for the year, for the quarter. In the case of domestic, I think in the case of overall reported EBIT of minus 0.8% is a tale of two halves, with TML standalone increasing its EBIT margins by 1,220 points and JLR declining by 490 points. If I just go into the individual sections of the various companies, in the case of JLR, while the retails were very strong at 6%, wholesales were down 7.7%, fundamentally because of customers deferring their purchases of cars because of the customs duty reduction that happens from 1st July onwards. And we also had planned dealer inventory reduction during the quarter. Tata Motors domestic had a growth of almost 83% for the quarter, albeit it has got an impact of a low base in the previous year. Overall EBIT margin of 130 bips down, and that's fundamentally because of JLR's EBIT going down by 490 bips, while Tata Motors underlying EBIT was up 1,220 points. So from a point of view of the domestic business, what really stands out for us is turnaround 2.0 was called out to win decisively in CV, win sustainably in PV, and win proactively in EV. This is something that is really delivering well for us, with CV market share increasing in every subsegment. CV margins, which we are now declaring for the first time segmental results, increasing is now at 11.7%, while passenger vehicle business increased share, grew ahead of the market, is now at 6.1 share. And for the first time, we're also declaring its financials, which is almost EBITDA break-even at minus 0.7% compared to minus 19.7 in the same period last year. So all in all, from a turnaround 2.0 perspective, it's been a very satisfying performance and a very strong performance coming through in the domestic business. Moving on to JLR. JLR, for us, the retail strong at 6% is good news, with UK coming back to strong growth. But JLR wholesales were down 8% due to the sales deferral that I talked about earlier. And its EBIT of minus 0.8%, down the overall EBIT was down 490 bips. It's fundamentally because of three reasons. Lower volumes because of destocking and China duty. We also had an operating leverage, therefore going negative. And that also meant, and we also had an FX unfavorable movement this quarter. So this is where the performance of the business has been. And the key message as far as JLR is concerned, going forward, I think their focus is continuing to be on growth, driving cost efficiencies, driving operating leverage, and ensuring that they do their capex prudently to manage the challenges that they are currently facing. We are confident and we remain committed that we will deliver the plan that we had put out in the early part of the year of 4 to 7% margins for JLR. That is something that we are committed to deliver for the year for JLR. As far as domestic business is concerned, we see some near-term challenges as the clarifications on the axle load comes through. But at the same time, we remain committed to ensure that we respond as soon as possible to the changes that are coming through there. Otherwise, we are pretty optimistic about the demand situation in the domestic business. The last of them is Tata Motors Finance. And on Tata Motors Finance, I continue to have a very strong performance this quarter as well. Their GNPAs, they grew their AUM by almost 35%. They grew their market share by about 132 bips. and their GNPAs are down to 3.7% with an overall ROE delivering of about 22%. So strong performance in Tata Motors Finance continues, and they have now moved on to Ind AS, and they therefore comply with all the accounting regulatory ratios as far as even in the Ind AS environment is concerned. There is maybe just one additional point I would like to make before I conclude, which is the Fit for Future update, where one of the big updates that we are giving this quarter is Tata Motors has now decided to revamp the business model for its Thailand business. We had entered this business in 2007 with a portfolio of pickups and local manufacturing. Currently, that business is subscale and is an unviable business. And we are therefore now moving it to a revised business model where there won't be any manufacturing operations on ground. And to meet the needs of the Thailand market, we will have a CBU distribution model, that is completely built units distribution model, which will give us a more sustainable business model in the long run and also ensure that we reduce the losses that are currently incurring there substantially. So that's the update from my side. Let me now turn you over for questions.
Margaret, we are ready to start the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of PR Sanjay from Bloomberg News. Please go ahead.
Hello.
Yeah, Sanjay.
Hi, sir. What is the guidance for margin? Because now you said that you are committed to deliver 4 to 7% margin, but at the same time, Brexit concerns and U.S. Trade what that is still looming. So how are you going to maintain that?
See, the current plan is we're not factoring any event risks in the plan, which we had clarified earlier as well. And therefore, the 4 to 7% margin guidance plan that we have for JLR stays, and we are confident of delivering that. And as far as Tata Motors is concerned, the plan is to deliver between 3 to 5%. And we have delivered 4% this quarter, and therefore we are well in zone to deliver that. And amongst the two, between the two, we are comfortable in terms of managing the overall show.
Okay, and how will this U.S. trade war impact JLR's plan?
At this point in time, I think there's a lot happening, as you are well aware of the conversations happening between EU and the US. So we are watching that space. And we are not, at this point in time, given the developments that we are seeing on the ground, the positive developments that we are seeing, I think it will reach a logical and correct place is what our sense is.
I'll get back to you with more questions.
Sure. Thanks, Ajay.
Thank you. The next question is from the line of Lala Tendu Mishra from The Hindu. Please go ahead.
Yeah, Lala Tendu.
Hello. Hi. So how much money you'll be saving from the Thailand operation after the restructuring?
See, typically in a year, last year it lost about 170 crores, and that's what we intend to stem completely.
Okay, thank you.
Thanks.
Thank you. The next question is from the line of Raj Kumar from Press Crest of India. Please go ahead.
Hi, Bala. I just wanted to check out on one particular thing about the Nano. In June, you had only one model produced. So what is the update on that? And then how far do you think that, because since you mentioned about the closing down of the Thailand operations also to cut down on the losses. So what is the exact status on Nano there which you are looking at right now?
Yeah, Nano, as we have always maintained that as of 2019, Nano will not meet the crash norms that is going to come into force at that time. So therefore, in its current form, it cannot continue post 2019. In the meanwhile, whatever we are manufacturing or selling is basically to demand. And we will, as and when we take a decision on that, we will let you know.
So what exactly is happening on the Nano lines, the line which is supposed to produce Nano? Are you utilizing it, or what exactly is the status of those lines at Sanand?
Sanand is running to full capacity.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of BALAJI from the Hindu Business Line. Please go ahead.
Hi, Ms. Balaji. This is Bala here. Hello? Hello?
We can hear you, Bala. You may go ahead.
Can I go ahead?
Yes.
Yeah. I would like to ask a question relating to the commercial vehicle business.
I'm sorry to interrupt you, Bala. We seem to have lost a line for the management. Request you to stay connected while we join them back. Ladies and gentlemen, request you to stay connected while we join the management line back to the conference. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have the management line reconnected. And we have Bala in the question queue. You may go ahead, Bala.
Hello?
Yeah, Bala. Sorry about that.
No, it's okay. I would like to ask a question relating to the commercial vehicle business. And how are the realizations during the first quarter? And given the pressures on commodity price increases and new axle norms, will there be a price increase in the coming quarters for commercial vehicle in the commercial vehicle segment?
Yeah, in terms of realizations, they continue to improve for us. The margins actually improved during the quarter as well. And year-on-year basis has been a substantial improvement from an EBITDA of 5.5 to an EBITDA of 11.7. So it's a huge improvement on year-on-year basis. Even on a quarter-on-quarter basis, it's almost about 20 bips up. And therefore, we continue to see good realizations coming through. And as far as the axle-related stuff is concerned, at this point in time, we'll have to just wait and watch. And we are aware that the new norms will require re-engineering, revalidation, and recertification. All three have to be done. So we are now working fervently to ensure that we get our portfolio ready for the new one.
Okay. And how do you see the trend on the commodity side? Do you see that price going up now, moving northwards in the coming quarters? How do you see that?
We continue to see inflation, input cost inflation is expected to continue. Commodities plus as well as currency coming down, both combinations together. And therefore, but we are quite comfortable in terms of managing the cost challenges, in terms of ensuring that we have a strong savings program in place. But we should be aware that these are, we need to continue to be watchful for the commodity increases.
Fine. Was there a price increase in the first quarter? For in the CV segment?
Early part of the year in April we had it, and that is what is out there.
What was the percentage? 2%?
Yeah, that was on the PV numbers. We had about a 2% number there. That's right.
Okay, great. Okay, thank you.
Thank you. The next question is from the line of YATIN MOTA from BloombergQuint. Please go ahead.
Hi, sir. I just wanted, a couple of questions on JLR. This time your EBIT margins were, minus of around 4%. And, for the full year you had guided that you would like it to be in the range of 4 to 7%. So does this mean for the remainder of the year you will be able to make up and, meet the full year range of 4 to 7%? Or, Q1 was an aberration and, you won't be able 7% there?
Destocking to continue into the second quarter as well, but it's part of our internal plan, so I don't see concern on that. And as far as currency is concerned, we are not expecting a dramatic depreciation in the pound sterling going forward because bulk of the bad news is factored in. And then on top of it, we have the full range of products coming in. For example, take I-Pace. I-Pace's order book at this point in time is 5.5 months. It's at a record level in terms of order books that is currently out there. Then, of course, comes the rest of the new vehicles. Take the PHEVs that you have put on Range Rover and Range Rover Sports. That is sitting at an order book of almost 4 months. So we have a very strong order book coming our way. And on top of it, we will also have the traditional seasonality that comes in because for JLR, first quarter is always the weakest quarter. And with the Chinese New Year as well as the UK registrations coming in March, this also changes. There on top of it, there is an explicit call-out that we have put out there in terms of aggressive cost reduction plans that are kicking off in JLR because we are recognizing the fact that the demand environment may not be as bullish as it used to be before, and therefore we are now accordingly taking corrections within the system there. The combination of these factors make us comfortable, and we have stress-tested it to say that the 4 to 7% number that we have out there is within striking distance.
Okay. So basically you will make up in the next 3 quarters, the kind of target that you have set. Sir, were there any incentives on manufacturing included in JLR, which you get in China this quarter or?
That's now an accrual basis, so there's no problem there. It's moved from cash accounting to accrual accounting, so no trouble there.
Okay. And so one final question on the domestic, demand side. How do you see it? And also, are the discounting in the commercial vehicle segment narrowing, when it comes to Tata Motors? If you could give us how really is the discounting sequentially shaped up for you?
Okay, as far as demand is concerned, we continue to remain optimistic on the demand environment in India. And the thing that is temporarily likely to impact, which is what we are watching very closely, is the axle load related clarifications as well as clarity that needs to emerge in the market. That's currently, we are working closely with the authorities, with SIAM to ensure that those areas are clarified. At the same time, we are also responding with speed to ensure that our new vehicles are getting ready for the new regime of axle loads. So that is the focus that we have. The reason why we remain optimistic is that the infrastructure spending is continuing, the GDP growth continues to do well. Therefore, and inflation, I think we believe is likely to continue to be stable. But that's something which we should always remain watchful about in terms of both inflation and interest rates not running too far away. So those are the mind spaces that we are currently onto. And we therefore believe in the medium to long term, we continue to remain bullish as far as the Indian demand is concerned, barring the near-term concerns on axle-related matters, which we are hoping will get clarified pretty soon.
Okay, sir, and on discounting in the commercial vehicle segment, is it down on a sequential basis?
I can only talk about my P&L, and you are continuing to see improvements in profitability in this business. So therefore, we are very clear that we need to add value to the customer, and discounting is not the only way to do value in this business. So therefore, the fact that we did a 6-year warranty, the fact that we have a full-fledged service offering to the customer, the fact that you now have the SCR technology in the vehicles, which people are now willing to bet on, and solving a full range of portfolio. Take the Ultra trucks that we have put in place, 14 trucks simultaneously launched, all tells you that we are approaching it from all possible sides and not just a discounting game, which is not how we would love to play the business.
But you cannot share the data per vehicle. How is it? How did the discounting per unit?
We don't intend to go into at a vehicle level. This is a portfolio that we manage, and I'm very, very comfortable with the way the portfolio is shaping up. Otherwise, our profitability will not be increasing in CV.
Sure. Thank you so much, sir, and all the best for the coming quarters.
Thank you, then.
Thank you. The next question is from the line of Shreyans Mehta from Jansatta. Please go ahead.
Mr. Balaji, good afternoon. Thanks for taking my question. The question is actually on behalf of our readers, many of whom being the investors of the company. Sir, some very long years back, you had issued DVR as an instrument at 10% discount to the prevailing price of normal share at that point of time. However, presently it is quoting at about 45% discount to the main share. Sir, is the company taking any decision or doing anything to address this issue, please?
DVR at this point in time was issued for a specific reason. At this point in time, we have not taken any decision with respect to DVR, other than saying that we do not intend to increase any liquidity on the DVRs in terms of additional DVRs, etc. at this point in time. Other than that, we don't have anything to share at this point in time.
Any thought about listing it on foreign exchanges, or is there any thought on that particular fund, sir?
No, sir, nothing at this point in time.
Right. Thank you.
Thank you, sir.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Arushi Kotecha from Mint Newspaper. Please go ahead.
Hi, Mr. Balaji. I just had one question on the guidance for profitability in the PV segment. When do you see that segment also, making some significant cost savings and reporting positive numbers? What is the sort of timeline on that?
Firstly, 3 comments there. Number one, the fact that we have split out PV CV results and called out a very explicit strategy on Turnaround 2.0 that we will want to win sustainably in PV tells you that we are now serious about ensuring that that business also stands on its own feet. And that's the reason why when we called out the six-cylinder strategy, saying that PV is a very important part of that game plan there. And to the full credit of the team running the PV business, you've seen the profitability improvement when it was minus 19.7% last year, same time, improved to minus 13.7 in the second quarter, then minus 4.6, minus 9.7, and now at minus 0.7. It's now at an EBITDA almost break even. So we are well underway. This quarter, this year it's almost improved its profitability on EBITDA basis by about 1,900 bips, which is quite a substantial improvement you would acknowledge. And at an overall EBIT level, the losses, which were about 800 crores roughly last year same time, is now down to 330 crores. It's almost a 500 crores swing broadly that we have done. So therefore, we are well on our way to keep improving the profitability of the business. We won't be satisfied with this level of profitability, let me assure you that. And therefore, it's our plan of action to ensure that we keep improving this with every quarter. And while we will plan for the full year and run with it, intentions is this has to improve every day. And I think the right mix of products that are coming in, as well as the right volume uptake that we are now seeing, as well as the right contribution margins of the individual products, and some very, very strong re-engineering work happening on some of our vehicles, and cost savings measure, including commercial. We believe we've got everything going for it, similar to what we did in CV last year, is what you're seeing in the PV business this year. And so we are quite happy with the way it has progressed, and we hope to continue delivering similar results. Hello?
Arushi?
Did we lose you?
Hello?
Yeah.
Right. Thank you, sir. That was very helpful.
Thanks, Arushi.
Thank you. The next question is from the line of Chetan Thakkar from ET Now. Please go ahead.
Hi. Just curious to know what has been the immediate impact as far as the demand environment when it comes to the fleet operators, and how the commercial vehicle buyers have reacted in the first few weeks post the axle norm?
I think, thanks, Ketan. I think at this point in time, the way we see in the market is that there's a lot of confusion in the market, and therefore very difficult to read in this environment. And therefore, we are putting our entire focus on ensuring we get as much clarity as possible into the market, as well as ensuring that we get ready for the new axle norm. So that's been our focus. And but suffice it is to say that at this point in time, the market is a bit confused, and it's our job as OEMs to ensure that we seek and secure the clarity and provide it to our market as well.
So has there been any impact on the volume so far? I mean, as far as
Too early.